Hello, and thank you for visiting my YouTube channel, Real Information About Real Estate. I'm Judy Carlo with Gibson Sotheby's International Realty. Today's topic is mortgages. Your loan officer is one of the three important partners in your transaction. Think of it as a three-legged stool. The agent does some of the work, the loan officer does some of the work, the real estate attorney does some of the work. And they all support your platform on top, which is purchasing your home. So where do you start? Most people start online. You start looking at different loan packages. Everybody finds, the lowest interest rates and start self-educating. And know whether you need a specialist. For example, if you're in the luxury market, you need a jumbo loan, find someone who does a lot of those. Or if you're a veteran, find someone who specializes in VA loans. You want somebody who really does that as their primary bread and butter. You also want to check out their communication style. Sorry. So interview them, talk to them on the phone, meet with them in person if that's practical, and figure out, are they a good fit? Do they fit your style? Do you just like bullet points and move ahead quickly, or do you like a lot of information, explanations, documentation, and granularity? Two different styles, both approaches work just fine. The goal is to get the pre-approval letter. So now you're at that point where you're going to have to do a little bit of heavy lifting now. That means documentation, and pay stubs and credit card information. But this will pay off because until you get all of that done and you get the pre-approval, although you can go out and look at homes, you cannot make an offer. And here in the spring of 2025, the market is so competitive for buyers that if you see a great house and it's only been on like a couple of days, that home is very likely to be gone, to have accepted an offer within 5 to 7 days. And you can't make an offer without the pre-approval, so go ahead and get that work done. Okay, so let's get to the good part. You go out, you look at homes, you do find the one. You make an offer, your agent negotiates it back and forth, and you get it. Yay! Everybody loves that moment. So now you're going to do a little bit more work. Yes, there still is more documentation, and maybe you get to do a home inspection. There's a purchase and sale agreement to be signed. It's your job now, as the weeks tick by, to go out once again and check out the general loan market. Things change quickly, so what may have been true 2 or 3 weeks ago isn't necessarily true now. There may be different packages, better packages, and you should research those. And once you find something, go back to your loan officer and say, hey, I found this online. It says, it's everything, it's the lower rate and it's better this, and they're going to give me all this money. Your loan officer can tell you, wow, that is a great package, or more likely, they're going to say, it's too good to be true. That happens a lot online. So if the loan officer wants to keep you as a client, then if you found a package that actually works better for you, it's up to him or her to go to his or her boss, and yes, loan officers all have bosses, and say, hey, we need to tweak this. We need to tighten this package. We need to be more competitive. Otherwise, we're going to lose the client. So they'll work very, very hard on your behalf. So those things are all moving along. You're getting excited. You know you're going to buy new appliances because the kitchen is just not what you want in this new house. And I'm telling you, you have to resist the urge to go out and take advantage of that wonderful special at Home Depot for 5 years and no interest, and start buying up appliances, because these purchases will change either your cash balance or your credit card amounts, and that can tweak the debt to equity ratios, which are all important in the loan process. And then you may have taken yourself out of the range of qualification for the loan package that you want. So the last 48 hours or so, the bank will do one final credit check to make sure that after they've given you a firm commitment, which usually happens 10 days to 2 weeks before the closing, and that's that period when it's really essential that you don't make any purchases. So after the commitment date, 48 hours before the closing, they will pull a final credit check just to make sure that everything is still in balance. And then you get to close, break open the champagne, and enjoy. But I also recommend that buyers think in the long term. It's the house that you're getting married to. You're really just dating the mortgage, because I should say, when rates go down, you're going to be able to refinance. And guess who would love to have you as a second-time client? That same loan officer who helped you on your first purchase. I hope this was helpful. Please subscribe or send me a question if you have one. I'm here to help. Real information about real estate. I'm Judy Carlo, Gibson Sotheby's International Realty.